Good day, traders. Welcome to K5 Trading. We have started a very simple course on the basics of the institutional trading a couple of weeks ago. Last week, we have learned about very basics of the market structure. That was the part one. Today, we will continue our learning journey. In this part two and the final version of and the final episode of the Market Structure 101, we will learn about the external and internal structures. Once the internal and external structures are understood properly, identifying the end of the retracement or the reversal will be very easy to grasp. But before we start, let's get on to the regulatory things and some basic housekeeping. So first of all, as required by the regulators, this video is presented only for educational purpose and it is not a recommendation of buy or sell at all. Note, this is a financial advice. The content of the video are copyrighted to the K5 Trading, so please respect our copyrights. Then next, some housekeeping. If you like what we present in this video and our previous videos, please join our Discord server. On the Discord server, we provide some more about detailed learning material, a weekly webinar, and we provide a regular updates on ASX, PSX, US stocks, Indian stocks, Forex, cryptos, and the commodities. Multi-time frame structure is where we're going to start today. But before this one, we like to tell you like what we have done in the last one. So in the last episode, or last two episodes, in the first episode, we have learned about the institutional candlesticks. Then we have learned more about the market structure. And now today we are deep diving into the market structure more. So there are two types of the market structure, and those market structures, they are on the higher time frame, they're on the lower time frame, and they also on the same time frame. Why we are distinguishing here between the different time frame? There is a reason for this one. In institution, they don't care about the time frame. They don't trade based on the time frame. They have their set prices of the entry and the set prices of the exit. The time frame concept is only for our retail traders. Try to understand different times of the day when the institutions are very active, and try to understand the market structure which was created due to the activities of the institutions. Other than that, there is no purpose of the multi-time frame. Multi-time frame is virtually nothing from the trading point of view. Okay, so here is there are two types of market structure, as you can see, internal and external, and we see market in this context within a different time frame. The analysis depends on the goal and the ultimate market movement. So when we choose the different time frames for the internal and an external structure, you need to understand that it is all depend on your goal and the ultimate market movement. If your goal is to make $1,000 every day by scalping, but the institutional market movements objectives are quite different, then probably your goal will not be able, you won't be able to achieve your goal. So we have to be very careful. Whether we do the scalping or whether we do the swing trading or the position trading, we have to understand the ultimate objectives or the people who move the market. And we have to set our objective accordingly. If we don't set our objective accordingly, then we won't achieve our goals and it will create frustration. Right. An external structure on the current time frame is an internal structure at the higher time frame. For example, whatever you see the current market prices on the 4-hour time frame, maybe it's just a part of the 4-hour time frame's activity, maybe a small part of a bigger activity which is happening at the daily time frame. So that's why it's very important to understand. Again and again, I will repeat that one. Time frame is only our internal mindset. It's got nothing to do with the institutional trading. Institutions, they do not care about the time frame. We create those time frame in our chart, just try to understand the institution's intentions and their market movements, right? Nothing more, nothing less. Right, so external structure on the current time frame. We're going to identify the external structure and we're going to identify the internal structure. This is we're talking about the same time frame. Then we will move to the another lower time frame. On the lower time frame, we will learn how to identify the market structure of the external structure of the current time frame, right? So on the current time frame, whatever the structure is, that will consider external. And when we go to the one time frame lower and activities within that higher structure, we'll consider the internal structure. And we will try to learn and try to develop the skills to identify those market structure as good as possible, so we can try to we can pick up them very, very easily. Right. So now, with all those sort of things, let's go straight to the charts and straight to the design drawing I have already prepared for you guys. Okay. So, did you see here something? And it's very, very important. That's this red line up and line down. So this is your impulsive move. This is your low, and this is your high. And then on the current time frame, the market start moving downwards. When the market start moving downwards, and if it is movement, this entire movement is developing between this high and this low, then this entire movement we consider as an internal structure. And this internal structure I have presented with this the purple lines. So let's say, for example, market reached to this external structure stop, then it's retrace. And whether this retracement break the previous structure something here or not, we don't care about this one right now. We will talk about this one later on. Okay. So the market make low, and then market may again another high, but fail to break the previous high. This is the first sign that we are inside of an internal structure of these external structure, which delineate from with this red line. So this is the first sign when market failed to break the previous high that we are developing or we are entering into an internal structure. When market drop again and break the previous low of this internal structure, then this is a confirmation now that the market is in the retracement mode, and we are in the lower time in the same time frame or in the lower time frame. We are now developing a structure which is internal to this external structure. This is the low and this is the high. I am just pointing again and again so we can have this thing set in our mind. What we see this price action, this entire price action is actually an internal structure of this external structure or external leg. Okay, move on to this one. Then we can see that we can see that market is breaking the structure downsides, and the market is actually in a kind of a bearish trend. So this bearish trend, what you can see here, it can be a lower time frame bearish trend, or it can be on the current time frame a retracement of this external leg, which is an external structure, right? And here we can see some maybe swing points happening here. Like, for example, I forgot to draw those one, but I can draw them. So, for example, we can see this structure is coming that way, okay? And something like this. So this is how I'm actually thinking it should have been coming for some, change the color of this. Okay, so maybe this is what was coming, and now we are focusing on here. So we consider this low and this high until the either side is break. This entire structure is considered an internal structure to this external leg. Okay, right. Now the next thing, what's happening is the market make a low point right up here, and then it's move upside again. It didn't fail the upper high. So that means that we still consider the market is a bearish and this retracement is continue. But then suddenly we witness that's a low point which failed to break the previous low. This is an alerting sign for us, the very, very first alert that market retracement is either complete or it is about to complete. Why I say it's about to complete or it's either complete? It's very simple reason. A reason is this low. This low up here did not break the previous low, but what actually it may have happened that it's maybe the institutions or the smart money is trapping the retail trader, that's market is ready to move upside. And that's why they create this low and didn't push the prices down. If the institutional really bearish on this market, they will always create this liquidity. And then when the people go long above this one and here, then they will bring down the prices, sweeping this liquidity and make another low below here. So that's a standard practice you will find everywhere in the market. But again, we for us, from the internal structure and external structure, the only thing we need to understand, this particular point failed to break the low of the previous low. And it's actually when this leg is moved upside, it's actually break a previous high. So that's our reversal is now, retracement, end of the retracement is confirmed. So when we have this action and this action, we can say that yes, our retracement action is completed. Now there are two options we can have it here. Number one, we can now focus our entire activities on this structure to the upside. And remember, this is an upside move, and this upside move is of this internal structure. So in this upside move, here we will start to search our entry points. So for example, if we have an order block, we have a fair value gap somewhere around here, we will target that one, and we also be mindful of this particular liquidity area, because this is a danger point for us, right? It is still possible that market can sweep the liquidity and then can go upside. So this is our the danger area. We will still consider this one. But let's start here from on this leg, and now this leg up here, which I'm highlighting with the different color. Let me see what color should I take the black color. Okay, so this leg from this point onward to this one, this black color. Let me make it a little bit thicker. Okay, so of this internal structure, this point is now our external leg, and this moment here, this become our internal structure in reference to this leg, right? And in this external structure leg here, we try to identify those areas where we can see the liquidity, fair value gap, or we can look at the order block, or what we call it, the point of interest. Once we identify those point of interest, that will be our area of the interest, and we will try to look for 1 to 3 reversal at this stage for market to reverse. This is in a very simplistic term I can explain to you about the market reversal and the market retracement. Now, what you see up here, but before you can see up here, when this retracement was happening, you have this external leg. In these external legs, you also have a fair value gap. You will also have your point of interest, and maybe that point of interest is developing somewhere around here, because you would have something maybe right up here or somewhere. It's not important. But when you see the prices moving this one, and now we got another one up here, right in this external leg. Okay, and the same thing happened here. If you miss this one, you look for this one. Another one right up here. Okay, so you can see that this red internal structure of this external structure, when this price movement is still inside of this leg, we will find multiple areas to enter into the market for this structure to be break. So that was the first point where it says like, yes, market is now reached in this the retracement or in the point of interest zone. We now start analyzing our internal structure. In internal structure, we identify that this market move upside, fail to break this low. Then we consider this another move which break this structure up here, internal structure. That's lag from point here to the point this one, this small move here and there. That's become our external structure now, and we now follow this entire process. We follow during the analysis of this red one. We just continue with this black one, and so on. And you will find before this break of the structure, you will find 1, 2, 3 many points here for prices to actually break this high and make your targeted and get you early into the market, right? This is for a very basic concept of the market structure. Now let's go to the chart and do very quickly review on this one. Okay, So this is the Australian dollar, and I deliberately keep the weekly time frame so you can try to understand what's happening on the market, high time frame market. We have the market top up here, something around $10. Then markets come down, right? Then it's gone up, failed to break the previous high, and market continues coming down and making lower lows and the lower highs, right? So all those areas up here. Then suddenly what we got this move up here, right? That's the move up here. The market make a low. Okay. Now, when market make this low, where would be your external structure? There are two things happening here. Your one so you see our two type of structures here. If you took from this low high to this one, that could be your the market coming down, so that could be your external leg. And in this external legs, you got this internal structure. This point here, this area here, right up here around 77 cents or whatever, this is the area where we should be actually looking market to give us some kind of the retracement area, what we point before. So let's go to the daily time frame and see what's happened. Okay, so here we got the daily time frame now. So we got this. So this is the area from this leg to this leg. Market is making lower lows. Here is suddenly start making high. Didn't break this previous high until this area. So once it's break this high up here on this area, or you can consider this one, either one. So that's your break of the structure, and the market move up. Now with this break of the structure in this time frame, we are looking for a retracement in this zone, right? So retracement in this zone. What's happening now? That market move lower, and that's start making lower lows and lower high here. So we can actually have a multiple areas of entries for the short trade, because remember, this is our low. So our anticipation that's market in this internal structure, market is going to make some high lows, and then we will actually break below this one. So we can start looking developing on this leg a different kind of the order blocks and different kind of the liquidities and all those fair value gaps in this area. You can further go to the lower time frame and you will find those settings around here. So let's we'll try to just play a little bit those charts, see what's happened. Remember, that's our initial external leg is from here to here. It has not been breached yet. This is our internal external. So this entire movement, what you can see here is our internal structure. And in this internal structure, we are looking for an area of the interest. So because our market bias is a bearish, so we're expecting market to actually break this one. But if it is break above here, above this area, and then give us some kind of clue that market is now reversing, then that's we will also see from this exercise. Okay, we got a breakout here. Okay, right, we got a breakout here. And if I can make the chart a little bit smaller, so you can see after this entire move up, and then it's playing internally. Finally, it's given a breakout of the upside. So what our bias is now? Our bias is if this market is actually breaked out, then we're expecting market to go for, our bias is now bullish. If it is a bullish, then we need to ensure that all those liquidities and all those areas, they are actually swiped before we actually enter. We don't want to enter right now here. So, and we will just simply look into this area up here or those internal structure, some of the point of interest where we can actually buy. So if you go from this external one, and because this is an internal one, which is break. So in this external leg, below the 50% is our area if you want to go buy. So if I can go right up here somewhere, there's the Gann cycle, hang on. Or let's look the retracement. We can look at the retracement, okay. The Gann box, right. So if you look at from this point onward, and this point onward, this is the area below this 50% if we want to go long. Institutions interested in this market to be bullish, then they would actually buy below this 50%. They will go long below this this external zones 50%. Otherwise, it's just like they're not interested. And if they're not interested, we are also not interested in movement. So let's continue. What's happened? Okay, the market is coming into the below the 50% zone now. So we should actually stop and we try to work out, okay, where we need to buy. So I can see this low and this low, and this liquidity has been taken out by these areas here. So the people who actually went long from here and here, and they had their stop losses or whatever, it has been taken out now here. So if the market actually taken out of this liquidity, this is the area of our interest. And if we can see, this is our low point, this is our external leg, and inside of this internal leg. So we want to develop now a kind of a pattern where we want to go long. So let's have a look here. From here onward, we want to see the market take out this low, this high, then retrace back on this area, and it's somewhere around here will be an order block point of interest, or whatever you can call it, fair value gap, which give us a long entry, right? So let's see if the market actually goes accordingly. There you go. Okay, so you can see if we would actually went long here, we would actually start in the losing the market, right? So that's why it's always important to try to understand that those concepts of the lower time frame internal market structure. What's happened here? The market take out this liquidity and take out this liquidity and then come down. So now our area of the interest or our point is changed here. We start the same practice or same area in this area, in this low point. Okay, now we can see it's actually break here. So that's this zone and our retracement of this entire leg, or maybe we can consider this one. This entire leg should be somewhere around here. We can see a fair value gap and some liquidity. So this area will sweep again and it will come lower. That looks like to me. There you go. Exactly what we were expecting. It will come to this fair value gap and take out the liquidity of below this one, and this is what it did, right? So you can see now, you look back here, where the area is touching and where the area is retracing. Did you see something? That was the first external structure we created in the weekly time frame. And now after all this entire exercise, and this entire exercise I will consider like it's all internal, but because here the structure was break, so that's why we consider the external, and then market actually came right at this zone, sweep through the liquidity of this, and then try to push higher. Now we go back to the weekly time frame and see exactly how big this movement was. So that's it. This is nothing more, nothing less, right? And what we should do now, we should continue our exercise from this point onward, and this move here, up here now, that's we consider another area of the liquidity. So if the market moves above, break this structure, and then it's failed the previous low, then we will make the similar structure above this one, and we try to work out our entry. So let's go back now. So let's start moving the market. Okay. Did you see something here? The market is actually try to work out to take out this liquidity below here in this zone. And it did, right? So our structure, this practice you have to keep doing until you find your reversal point. We didn't got our reversal point here, so we move our targets in this area. Now let's target where should be market actually first break. So market needs to break this high or maybe this high, and then it's need to give me an area of interest somewhere around here. And that's how I actually continue my exercise until I can find a reversal, right? So that was a practice and example which I giving to you, and I choose this example purposely so you can understand how many times you actually have to move your goalpost, your analysis, just try to find the right place to get a reversal or a retracement. That's all for this week, and next week we will try to understand a different topic, which is liquidity, and those liquidities will be, we will understand like where are those liquidities, how to identify them, and try to work out what we can do with those liquidities. Now, the one more final words before we can close this one, and it's become too long. This entire exercise you can find in the same time frame, the internal and external structure, and on the lower time frame as well. So this external structure on the one time frame, when it doesn't get break, then entire exercise is internal structure. But if one external structure on one time frame can be an internal structure on the lower time frame, and this is where you pick up your reversal entries and entries and exits. All right, guys. I hope you enjoy my videos, and if you like it, please comment below, and also like our channel, subscribe, share the videos among your friends so they can also get good learning what you got. Okay. Bye for now, and